Bom, pessoal, tudo bem? Vamos começar oficialmente aqui o evento. Felipe e eu vamos começar uma introdução rápida aqui do nosso lado, só para fazer um recap dos próximos passos do Constellation Challenge e também explicar um pouco a dinâmica aqui. A gente pede desculpa pelo atraso, a gente teve um probleminha na agenda, mas já estamos com todo mundo aqui pronto para começar, tá bom? Então, o evento vai ser dividido, a gente vai fazer uma introdução rápida com o time da ABI, a gente tem o CFO, o Fernando, e o diretor de RI, o Sean, que vão fazer uma apresentação rápida, e depois a gente vai partir para uma sessão de Q&A. Vocês fiquem à vontade para mandar para a gente o Q&A via a plataforma do Constellation Challenge, a plataforma do YouTube, e também via e-mail, tá bom? Então, o Felipe vai explicar um pouco agora os próximos passos e as datas da competição, e a gente pode partir para a apresentação.
Então, vamos lá, pessoal. Retomando para vocês, a gente tem a entrega da etapa setorial de 10 slides amanhã, 19/3 até as 23h59. A gente vai voltar com o resultado para vocês até segunda-feira à noite. Assim que a gente voltar com o resultado e falar quem foi aprovado para a próxima etapa, a gente vai disponibilizar também um modelo de ABI para ajudar vocês na análise do caso específico. E está marcado para quinta-feira, 24/3, também 23h59, a entrega do case de investimentos. Com isso, a gente deve divulgar a resposta para vocês até sexta-feira, e sábado a gente tem aí a semifinal pela 26/3, marcada pela manhã. A gente ainda não tem um horário certo que vai começar. Terça-feira da outra semana, então terça-feira, dia 29/3, já às 18 horas, a gente vai ter o evento final, com a banca de jurados que a gente selecionou para vocês, que vai ser composta esse ano por 2 nomes aqui dentro da casa, então o Florian Bartunek e o Felipe Ribeiro Davi, sócio aqui do nosso time de investimento. A gente vai contar com a presença do Maurício Bittencourt e com o Fernando Tenenbaum, CFO da ABI, e também o Paulo Lehmann, do conselho da ABI.
Então, como a gente comentou, o evento vai ser em inglês, então a gente vai mudar para inglês agora. So, first of all, we would like to thank Fernando and Sean for their time and for all the support they're giving us on the Constellation Challenge. We're truly grateful. We'll kick off, and I'll leave the floor to Fernando and Sean.
Thank you, Fernando.
Okay, thank you. So it's a pleasure to be with you all today. The idea is that I'll go over a quick presentation on ABI, and then after that, we're going to have some time to have a Q&A session. Okay, so let's move to the first slide is a little bit of where the company started and how the company was created. We have very long roots, if you could say so. The Stella Artois brand links back to 1366, and the Lef brand, which is a brand that we sell in Belgium. Actually, you can have that in Brazil as well, but we sell a lot in Belgium. In France, it's a brand that dates back to 1240. We had a lot of different combinations until AB InBev was created. We had almost two very large streams. The European side, which is the first combination, was Jupiler and Stella Artois. Stella Artois, the 2 leading breweries in Belgium. Then in 1995, we have the addition of Labatt, which is the leading brewery in Canada. And then in 2002, we also added Beck's, which is one of the most famous and iconic German brands. On the other side, on the Brazilian side, we had Brahma in 1989. Then in 2000, we had the merger of Brahma and Antarctica to create Ambev. In 2002, we were able to combine with Quilmes. And in 2004, these 2 different branches, they get together to create what was InBev in 2004. InBev also had different journeys. So in 2008, we combined with Anheuser-Busch when we create AB InBev. AB stands for Anheuser-Busch InBev. Then in 2013, we are able to combine with Grupo Modelo. And in 2016, the latest combination with SAB Miller. And now one can say that we are truly a global company, and that's AB InBev today. In the process of, as we combined it and create this very large company today, we become the biggest brewery in the world. Key figures of 2021, we had $54 billion in revenues. We have 200 breweries. We have almost 170,000 people. We sold 581 million hectoliters. Each hectoliter is 100 liters. So if you simplify, it's kind of 58 billion liters of beer. So it's quite a lot of beer. Can get a lot of people. Can deliver to a lot of people. We operate in nearly 50 countries. We have people working for ABI of 125 different nationalities. Our EBITDA, which is earning before interest, tax, depreciation, amortization, amounted to more than $19 billion. There was a growth of 11.8% organically versus the previous year. We have 313 brands, and since you are doing a challenge on evaluating a company, our EPS was $2.88 per share last year. Okay. This is a map where we operate, so you pretty much all continents, pretty much across the globe, North America, Middle America, South America, Europe, Africa, and Asia Pacific. When you think about ABI, one may think as just a brewery, but if you look at the different connection points that we have, our ecosystem, both upstream and downstream, we have at the center 2 billion consumers that are buying our products. And in order to reach these 2 billion consumers, we need the help of more than 20,000 farmers, more than 100,000 suppliers, and our footprint with more than 200 breweries to be able to produce. And then with that, we ended up having more than 500 brands, touching on a weekly basis more than 6 million consumers, more than 6 million customers, and we have more than 5,000 wholesalers. We have some direct distribution, but we also have a lot of wholesalers. And when you look at this ecosystem, if we think starting from beer, which is the business that we know, then how much we can expand beyond beer, which is products that have similar consumption occasion as beer, but they're not beer by definition. The best example is Beats, or it's called Beats as it is known in Brazil. It's a beyond beer product, but similar consumption occasions. So it's a huge opportunity for us to expand this market. Then we have on the supply side biotech initiatives, given the farmers, given the know-how that we have, what we can do in terms of biotech initiatives. And on the right-hand side, we have what we call the digital, the commerce. Since we are talking to that many customers, how can we digitize and monetize our assets? And that led to our very simple strategy, which is number one, lead and grow the category, be it with beer or beyond beer products. Number two, given that we have this very strong footprint, this very strong ecosystem, how we can digitize and monetize it. And once we are leading and growing the beer category, digitize and monetize our ecosystem, we generate a lot of cash. How we can make sure that with this cash, we optimize our business. When we look at, we have a very clear plan to lead and grow the category, and depending on the market, we have different levers we can pull. If you go to a more emerging market, there is a lot of work on being an inclusive category. There are a lot of consumers that for different reasons are not being able to drink our products. So finding ways to reach these consumers, it's a very important level of growth. Then you start going down the ladder. Core superiority is to make sure that your core portfolio, mainstream portfolio, is very healthy and delivering something more to consumers. So they really favor your portfolio. Then the other one is occasions development. Everybody thinks about beer, thinks about happy hour, but there are a lot of other occasions where people might be drinking beer, like with meals, for example. So developing that, especially as the markets evolve, it's a huge opportunity as well. Premiumization. All the markets are premiumizing, and beer is no different. So there is a huge opportunity there. And then lastly, beyond beer. Okay. Then when we talk about digitize and monetize our ecosystem, there are three main areas of focus. One is the B2B software and fintech services. We have our platform, which is called BIS. Today, nearly half of our revenues we generate then through digital means, which I mean, so instead of having a sales guy going and taking an order from a point of sale, he orders that through our B2B platform. It's way more efficient. You can run a lot of algorithms. You can have a lot of intelligence on it, and it tends to be good for the customer and good for us. We have direct-to-consumer initiatives on e-commerce. The one most people in Brazil will be familiar with is the Zé Delivery. It's we had 60 million orders last year, so it's a huge success. And the last one is the biotech initiatives. These are more in early stages, but for example, with the saved grain, whatever is left over from the process of making beer, we can work on it and extract proteins and then sell that at a premium. And that not only helps us to be more efficient, but helps to tackle one important problem, which is food worldwide. And then the last one, to optimize our business, we need to make sure that we maximize value by focusing on resource allocation. This is very important. So how we drive growth through optimal resource allocation, the risk management component, and the last one is the efficient capital structure. So this is also the discussion on dividends, how much is the dividends, how much is debt you take on the company, and how you manage that over time. So talking about full year 21, we had volumes growing nearly 10%, with revenues growing nearly 16%, and EBIT was up almost 12%, 11.8. We finished with a net debt to EBITDA ratio of 396, which is our lowest net debt to EBITDA ratio since the combination with SAB Miller, and we proposed a dividend of 0.50 per share. In our journey to lead and grow the category, it's fair to say that we reached an all-time high volume, which shows that not only we are leading the category, but the category is growing as well. When we talk about lead and grow, we have 5 different expansion levers, and we've been delivering in all of them. The inclusive category, the brands that we call inclusive, they grew by double digits in 2021. In the core superiority, our mainstream portfolio delivered 10% revenue growth. On the occasion developments, both non-alcoholic beer, they grew revenues double digits, and Stella Artois, it's very linked to meals, grew more than 20%. On the premiumization, today, more than 20% of our premium brands, they grew more than 20%, and they actually contribute to 1/3 of our global revenue. And on Beyond Beer, our revenues grew by more than 20%, already achieving $1.6 billion last year. Then BIS, which they digitize and monetize, we grew the monthly active users from 1 million to 2.5 million. And just bear in mind that I mentioned that we have 6 million customers, so it's almost half of our customers are buying through BIS. The GMV moved from $3 billion to $20 billion in 2021. The number of orders per week more than double. Each buyer is interacting with the platform 31 minutes per week, and now we have 30% of our buyers not only buying our products but also buying marketplace products through BIS. On direct to consumer, we had $1.5 billion in revenues, which are at 3% of our total across 20 countries. So we have more than 20,000 retail stores. This is mainly Mexico, which is called Modelorama. We have in other markets, but mainly Mexico. Our e-commerce revenue grew 62%. And when you look at the amount of online transactions, 66 million online transactions. On the optimizing our business, the key KPIs is we've been deleveraging. So we reduced our gross debt by $10 billion in the last 12 months. So in 2021, our net debt to EBITDA reached 3.96 times, and our pre-tax coupon cost of debt is 4%. So it's mostly fixed, 94% is fixed rate. And our debt maturity profile is in such a way that we have no near-term refinancing needs. And when we look forward, we expect to deliver in 2022 4 to 8% growth. We expect to have our revenue growing ahead of EBITDA, and expect to make capital expenditures or investments of $4.5 to $5 billion. Our effective tax rate is expected to be in the range of 28 to 30%, and our medium-term outlook is a similar growth, the same range, 4 to 8% growth range over the medium term. With that, I try to make as quick as possible so we have a good amount of time for Q&A. Thank you.
Fernando and Sean, can you hear us?
Yes.
Okay, so let's start with the first question we received here. ABI currently operates globally across multiple regions and geographies. Could you help the students understand how the company thinks strategically about each of these geographical hubs? For example, which regions should be growth leverages for the company, and how much is the expected growth from some of those regions?
Okay, so let me try to break down the word in a few parts. So if you talk what we call M2 are markets with a medium level of maturity, which tend to have a very strong growth and a lot of opportunity to increase per capita, and they are already very profitable. And in these markets, we can have Mexico, we can have Colombia, we can have Peru, we can have Brazil. So these are kind of this is probably where most of our markets fall into, and a lot of growth. Demographic is very supportive, very profitable, and should continue to be an engine of growth going forward. Then we have one market that is very unique in a sense. So we almost kind of create one bucket specifically for it, is China. China is a market that has been driving most of the beer industry growth in terms of volume from 2000 to 2010, and a lot of the profitability growth from 2010 from 2020, as we see a lot of the population growing from lower income class to mid income class. When you look at the Chinese government plan for the next 5-10 years, you expect to have more than twice as much people going to middle income class as what happened in the last 10-20 years. If that is the case, then the opportunity for premiumization in China is massive. We are already the leader in premium, but there is much more to come. So that's a market that is, in the past, was all about volume. Now you should have seen some volume, but a lot about premiumization, a lot about increasing profitability there, which is already at very good levels. Then we have another sort of markets, which is the more mature markets, if you could say so. It's like the US and Europe. And then these are markets that are very profitable, that kind of you can always premiumize further to get more revenues in these markets. But over and above that, this whole beyond beer, it's a massive opportunity for you to drive growth. In some of these markets, like Canada is a good example, the industry was declining for several years. With the creation of the beyond beer, the industry is back to growth, and a very healthy growth, because it's not only growing, but growing with better margins than the products, than the sort of mix that we had before. And then the last area is these countries that have a kind of a lower maturity level, but a lot of demographic tailwinds and a lot of growth potential. And the most obvious one I'm talking here about is Africa. So if you think about countries like Nigeria, for example, like is the country in Africa with where you have more people, it's growing a lot. It's still very early stage in terms of maturity, but potential is massive. But you also have some countries with similar situation in Latin America. You could have sometimes in Central America, sometimes even in countries nearby like Bolivia. It's countries which are lower stage, but with a huge opportunity as well.
Yeah. And if I could just compliment what Fernando said, I think if you look at the breakdown of our business into each of the different zones, when Fernando's talking about developing markets or M2 markets, it's really Middle America, South America, and APAC in many instances. So that makes up 55-56% of our overall EBITDA as a business. When referring to developed markets, it's really the North America zone, which is US and Canada, which comprises about 30% of our EBITDA, together with the Europe portion of our EMEA operating zone, which is probably half of what the overall EMEA zone is, and then the emerging markets, really early stage growth markets, is Africa, which is the other half of EMEA, plus one or two smaller countries in the South America region and Middle America's region, like Honduras and El Salvador, Bolivia, etc., that are really in the early stage of economic development. So the overall majority of their portfolio sits in what we call developing markets, just less than, probably just more than a third in developed markets, and then a smaller portion just Africa and some of the small countries sitting in the emerging markets bucket.
So quite interesting. Thank you, guys. So moving on, we have another one here. So you presented that the three main drivers for the future growth of the company are lead and grow the beverage category, digitalize and monetize the ecosystem, and optimize the business. I think it would be very helpful for the students if you could run through them and give more details of the strategy around each one of them.
Okay, so the first one, sometimes people start getting too excited about a lot of different things. But if you take one step back, we are a brewery, and if we don't grow the beer industry, there is no way that our business is going to grow, no matter what we do. So 95% of our business, at least currently, is on the beer side. And at some point in time, we were so focused in growing being part of one of the agents of consolidation of the beer industry, a lot of different combinations, a lot of M&A and structure synergies, that maybe we take the out of the ball and didn't kind of lead the category in a way to drive growth and to do what a leader should be doing. So now that probably this inorganic phase is behind us, we, as the largest player in the beer industry, should lead this growth, and we should be growing ahead of the whole category. The good news is that beer is a segment that globally is growing. It's a very healthy segment, so there is growth all around the world, and we have very good momentum. Our portfolio is working very well. Once we make sure that we lead and grow the beer category, what else we can do there, given our capabilities, given our route to market? And that's where this kind of beyond beer start becoming an important lever. So just to kind of simplify, we need to make sure that the beer category is growing. We are helping the category as overall to grow. And once you do that, leverage even further our capabilities to grow even more and to create kind of a near beer, beyond beer opportunities. Then once you are doing that, you have a very strong footprint. You have your breweries, your suppliers, your farmers, your customers, your wholesalers, your direct distribution facilities, your trucks. So once you have all of that, how can you monetize? How can you make more out of those? A good example is our B2B strategy. Once you start putting together the B2B strategy, is a more efficient way for you to connect with your customer. He can spend more time interacting with you, because normally a sales guy spend like 5 or 7 minutes per week in a point of sale. When you go to our B2B platform, he spends 30 minutes engaging with the company through the app. So the first objective is to kind of improve the user experience. The second one, you can start having algorithms helping to set the right portfolio, which is much better for the point of sale, because he can put an algorithm that is a better fit for his point of sale. But also it's better for us, because if he's making more money, we are making more money, so it's a win-win proposition. But now that you have this infrastructure in place, you have the pipes in place, why not leverage and start having a marketplace where other companies that sell to them can deliver on that? Just for you to have a number in the back of your mind, when we are 25% on average of the purchase from a point of sale. So the other 75%, they are buying from other providers. If we are able to sell through to our B2B platform, it helps them. It helps a lot of the small suppliers, because sometimes they don't have a sales force because they're not big enough. So they can supply at a lower cost, and it helps us because we also get a margin there. So this is kind of the digitize and monetize, taking a look of all our assets and what we can do to be better on that. And by doing all of that, we ended up generating a lot of resources. And then since you have this aim to grow, how you allocate your resources can make a huge difference. Like every time that you talk about someone about resource allocation, everybody say, oh, great, I need more resources, send more money. But resource allocation is not about sending more resources, it's sending resources where it's going to make a difference and taking out resources on where it's not going to make a difference. It's to make trade-offs, and some of these trade-offs involves hard choices. But if you try to do everything all the time, you're not going to do well, and you're not going to deliver the sort of returns that you should be delivering. So it's about being efficient and having a resource allocation that supports growth. And then continue to look at your resources, how you deploy the resources in terms of M&A, paying shareholders, which is dividend or share buybacks, paying debt holders. So there is always a balance to optimize, and doing that dynamically, almost like every day, creates value for the company as well.
Perfect, Fernando. So we have a question here from Levi Souza. He's asking if you could please explain a little bit more about the competitive environment. So how does the company see its main competitors?
And normally, I'm not a huge fan about talking about my competitors. There are more often than not, I get into an investor meeting and someone, what about this competitor? Now that this competitor is doing something different, how are you going to react? Because competition has changed. I joined ABI 18 years ago, and the first day that I joined, the only thing that I learned is that beer is a very competitive market and has always been. And we need to make sure that we're always one step ahead of the competition. There are moments in times that for whatever reason, we were not ahead of the competition, but that's where you need to make sure that you have the best people around you to make sure that you work very hard and always come with innovative products. Brazil, you are all familiar with that. At some point in time, we had a very strong market share. We lost some market share because probably we didn't see the premium opportunity or some of the innovation opportunities too soon. We are focused too much on ourselves. We probably take the eye a little bit out of the consumer. But then probably over the last 2 or 3 years, we are a completely different company. We are innovating a lot. Probably a lot of you had already tried the Brahma Duplo Malte. Fantastic product, Spaten. So we have a lot of brands that we are launching, and that is not only Brazil, it's across the globe. Like there is a Duplo Malte in South Africa now, so it's Castle Double Malt. There is a Duplo Malte in Colombia, the same concept. So we are innovating a lot. As of today, 10% of our revenues are products that didn't exist on the last 3 years, so it's new products innovation. In some markets like Brazil, this number is like 20%, and then you see that being reflected in market share. So we've been gaining market share in all of these markets, and this is also reflecting the all-time high volume that we're seeing. So to summarize, competition is always important, is good, it definitely keeps us honest. But if you start looking too much at your competition and not making sure that you are looking at the consumer, what he wants and what he needs, then you have a problem. The moment that you focus on your consumer, try to innovate, try to bring some products that deliver on their needs, be it in different moments, be it in terms of flavors, occasions, so you can name it, then normally you are outperforming your competition.
Quite interesting, Fernando. So I think linking to what about innovation that you mentioned in this answer, I think it would be interesting if you could give us a little color on how can you create a mindset and a culture that brings innovation, and how ABI manage consumer habits, how you keep building new brands, how you sustain in relationship with flagship products from the current portfolio. How can you create an atmosphere that will result in more innovation and across all of these points I mentioned?
Thank you. Very good question. So I feel, first of all, you are always somewhat, you have a lot of different marketing intelligent kind of teams all around the world trying to gather what are the trends, where people are going. You should be looking at not only kind of talk to the consumers, but even looking at demographics. Let me give one example. When we started operating in China, when we look for like in 2010, 2012, 10 years ahead, one thing was very clear is that middle class would be much bigger than it was back then. So if middle class was bigger, there was a huge opportunity for you to create a premium portfolio. And then with this insight, we start investing into the premium portfolio way before premium was a reality. And then when premium became a reality, we are way ahead of everyone else, and we had a lot of tailwinds in our portfolio. Then the other piece is how you make sure that you innovate in a smarter way, in a better way. Probably, I don't know, 10 years ago, whenever you would innovate, you'd have a lot of people kind of our breweries trying to make a new liquid, a new package. Then you have some marketing teams doing a lot of testing. And then once you finish the testing, you do kind of a massive rollout, make a lot of products, advertise a lot. And then if the thing went well, great. If the thing failed, then you have a lot to deal with and kind of go back to square one. Nowadays, Brahma Duplo Malte is a good example. Brahma Duplo Malte, we had the pilot. Instead of making a nationwide launch, we had a pilot. We tested in 2 cities. Then we get the feedback from what we are seeing. We make some tweaks, we make adjustments, we test it again. Once the feedback is very good, then we scale out. So in that way, you can kind of test for a shorter period of time using less resources, and when it makes sense, you scale up. And I'm telling the one that was successful. There were like 3 or 4 that were not successful, but no one of you actually get to know it, because we didn't launch the product in a nationwide scale. We finished the test, then it's kind of we learn it, and then we move forward. So for me, this kind of failing fast and learning while you are failing, it's very important. Because otherwise, no matter how much you say that it's okay to fail, and it is okay to fail, if you start making very large failures over and over again, there is always, no matter what you say, people hold back and avoid taking risks, and you need people to take risks. So this idea of making pilots very agile, doesn't work, let's kill it, let's do a new one. Once it works, great. If there is a feedback, let's incorporate, let's tweak, and then let's move forward. This makes a huge difference.
Great. So moving on here, during the presentation, you talked a little bit about Zé Delivery. We had a meeting with Ambev a couple of weeks ago, and they also explored many topics around that. Could you please share with us a more global view on Zé Delivery and BEES, those 2 ventures?
Okay, so let me start by BEES. BEES is the B2B platform, and we are rolling out already in 16 countries. So it's very efficient, and at least a lot of countries are very similar among themselves. So pretty much all the Latin countries, we already have BEES, and we have also in some African countries, we are start rolling out to the US, to China. US and China, they are a little bit different given some regulations, so it's not exactly the same. But BEES is kind of having this interaction for customer, direct interaction, and being able to do algo selling, to have a platform that is much more flexible. So that's what BEES is. That's the idea behind BEES. Zé Delivery, in a way, it's kind of this one-to-one relationship with your consumer. A lot of people say that, especially most consumer good companies, whenever you go out on a date with the consumer, you always bring a third wheel alongside. You are never alone. So there is always someone else together with you. There is always a middleman. With Zé Delivery, you can have this one-on-one interaction, and then not only you can serve them better, but you can also learn a lot about the consumer. You can have very valuable data, because some people say, I have a lot of data, but is the data valuable or not? With Zé Delivery, you have a very valuable data. For example, in the past, there was no way for you to know that Tuesdays at 8:45 p.m. could be a good consumption occasion. You could infer, because maybe there is soccer on Wednesday and soccer may be a good consumption occasion, but you never know exactly what time, because people would go to the supermarket, buy like one day before, so you never know when the product was actually being consumed. Now, with Zé Delivery, you have a very good idea when the product is being consumed. What is the occasion? If it's a barbecue, if it's a soccer game, if it's whatever event, and being able to understand that, you can do a lot of you can improve a lot the service and can interact much better to the consumer. In terms of countries, we're exploring taking Zé Delivery to other countries, mostly in Latin America right now. But it's fair to say that right now the biggest market for Zé Delivery is Brazil.
Great. So we have another one here on total addressable market. When we are analyzing a company and working on an investment case, it's always one of the most important topics to understand and to assess how big the market is. And you have several ways to do that. So I think it would be very helpful if you could run through that of how the students should try to calculate the total addressable market, thinking of regions, thinking of categories, segments, and other divisions you think are worth considering.
Yeah, that's always a very interesting thing. So first of all, the good news is that beer is somewhat. Let me put it in a different way. There are some markets that the market is still unknown, and you have to make a lot of forecasts about how the market is composed. When you look at beer is already a very large business. So you can look market by market, try to look at demographics, try to look at population, if the population is getting rich or not, so economics. So there is a very easy way for you to model beer market by market. What is kind of probably a little bit more unknown is how you start a kind of modeling this beyond beer, this new product, which is incremental growth, very good growth. And on this one, probably you have to take clues on the market where this is already happening, markets like the US and all of that. And the one that is more complicated, and probably the way for you to model, it's more kind of trying to see what is the optionality to have that, is some of these new products like biotech, like BioBrew, for example. We are trying to develop some kind of precision fermenting at scale. This can help to solve a lot of the world's problems in terms of food, and we are the ones that have the best knowledge of large-scale fermentation. We are the largest fermenters in the world in the process of doing beer. So this one is kind of more disconnected from our business, leverage on our know-how, but then it's a market that no one knows how big it can be. The only certain is going to be very large, but then it's a little bit harder to model. So in a summary, I'll try to model the beer industry, start from where it is today, and try to layer economics and demographics on top of that. For the beyond beer, I will try to see what is going on in countries like the US and try to understand at what moment in time this can be quite relevant for other markets as well. And for the other ones which are more new business, which can have this sort of exponential growth, like a marketplace, like a biotech, I'll try to look more from if it was an option, how much value it can create, because it depends on which scenario you are running. It can create a huge amount of value, and we're quite excited with these opportunities.
We have another question here in the chat from Fred Trina. Good afternoon, Fernando. How is the company seeing the impacts of the Russia-Ukraine war on its operations, considering that a considerable share of the world barley offer comes from those countries?
No, thank you. Good question. First of all, the concern number one of the Russian-Ukraine war is about making sure that the people is the humanitarian side. So we are doing a lot of efforts on this. We don't operate directly in Russia and Ukraine. We have a JV with that Turkish company called Efes, and where we own a stake, and they operate the operations in Russia and Ukraine. But having said that, whenever we have someone somewhat affiliated to us, we consider them colleagues. So there is a lot of effort trying to protect the team which is in Ukraine. There were 1,800 people in the operation. Pretty much most of the operation in the countries that were affected by war, and we have been able to move I believe 2,000 people, that is employees and families from the JV, to a safer location. I believe 400 or 500 of those actually out of Ukraine, either in Poland or in Czech Republic. So, and we are also trying to send water to see how we can help during this terrible conflict. Having said that, when you look at supply chain, which is a side effect of that, even though they are a biggest producer of wheat, we source very little from that region, very little, if any. So for us, for this year, no impact in terms of availability. The impact that you are seeing is probably cost of goods sold, commodities. Commodities are going up because of that, and that is likely to trigger some inflation around the world. What is more of still to be seen is what is going to be the impact 1 year from now, 2 years from now. And why I'm saying that, even though today we buy very little from the region, so it's not a supply chain issue, if we start continue to see the war, if there is continue to be the fight going on, at some point in time, other places in the world that were getting barley, for example, from Russia, Ukraine, won't be getting, and then the other regions will have to try to make up for that, and there will be competing crops. So barley can be a competing crop to wheat, can be a competing crop to corn or rice, and then I don't know exactly what is going to be the outcome, but that can be more of an issue medium to long term. Short term, we have no problems.
Very good. So we have another one from the audience, from Renan Ambar. He's asking you, Fernando, if you can talk a little bit about company's hedge strategy, and just complimenting him, how is the challenge to manage operations across very different countries with different currencies? How is that you guys take care of that?
Yeah, our hedging policy is a very simple one. We hedge our cost of goods sold, not our cash flows, not kind of our equity investment, just the cost of goods sold. We say the transactional exposure for commodities and FX. So, for example, if I'm in Canada, I need to deliver profits in Canadian dollar. So if I buy aluminum in dollars, I do the commodities hedge, and I do the hedge from dollars to Canadian dollars. And I do the same in Mexico to Mexican pesos, the same in Brazil to Brazilian reais. We always try to hedge on a rolling basis 12 months out. And the view is not to make money here, but it's just to give visibility. Because if the price is going up, at some point in time, it's going to hit you. If the price is going down, at some point in time, it's going to benefit you. And that's kind of the whole approach. Then on a consolidated basis, we try to adjust our net debt to make sure we offset somehow the different currencies and how the different currencies float over time. But given that we are here for the long run, you do have to accept some kind of a currency fluctuation in the short term. For example, it's impossible for us to hedge the flows of Brazilian reais into dollars. So if I try to hedge that, the numbers would be so massive that I could have a kind of even though economically it might make sense, cash flow on a daily basis, you wouldn't be able to afford it. No one would be able to afford it. So the decision is hedge the operations to deliver cash in local currency, and then once you receive this cash, we can manage that using our net debt to make sure we minimize any volatility. But there will be some. There is no way to offset 100%.
Fernando, I know that you have a hard stop now, but do we have time for one more question?
Yes.
Okay, great. So I know we talked and covered a little bit about a total addressable market, but seltzers and other types of alcoholic beverages seems to be a hot topic for ABI now. How should students approach this topic in your view?
Yes, that's a very good one, because actually seltzer is very interesting, and everybody's talking about seltzer, or is it cannibalizing beer? Very little. It's mostly accretive to beer. And why is that? There are people that love beer like me. There are people that don't like beer. And the people that don't like beer, a subset of these people, when you ask them why you don't like beer, and they said, oh, because it's because of bitterness. So so bitterness could be an issue. The second one say, oh, too many calories. So I don't know if it's true or not, but there is a myth that the beer has too many calories, because we have light beers with very few calories. And the third one is bloater. Kind of when you drink, you feel this kind of a little bit bloater in your stomach. And then you look at hard seltzer, it tackles a lot of the issues, a lot of these three issues. The issues that it tackles is it has less calories. It doesn't have the bitterness. It's actually even sweet. And the last one, it's kind of the bubbles are smaller. And instead of exploding in your stomach, they explode in your mouth, so they don't create bloater. So you ended up bringing a lot of new consumers. But and maybe that's my case, I would never trade a beer for a seltzer. Even though I can drink seltzer, I'm much more of a beer fan. So they are always going to coexist, and it's going to be mostly incremental. Then another alternative that we are doing is not even seltzer; it's canned cocktails, because a lot of people like cocktails, but it's a lot of work to do cocktails. And if you are in a party or in an occasion or in a, I don't know, outside having a barbecue, you never have someone actually preparing cocktails. It's too much of a hard work. You ended up having a canned cocktails is very convenient and can have another addressable market. What I'll try to do then, to try to check, I would see what is the trend in the US, how much this segment is growing, and then I will try to make a proxy to what can happen to the other markets. I'll try to correlate that somehow to economics to see when is the moment that these new segments start kicking in, and see how we can kind of replicate. But probably it's much easier to forecast the total size of the beer industry than if you try to forecast the total size of the beer plus the beyond beer. That's a little bit more challenging because it's growing a lot and there is a lot of new products, innovations in there.
So, Fernando, we are aware you have to leave. We would like to thank you on behalf of Constellation and all of the students. Just so everyone knows, we're staying for another 10 minutes with Sean, but thank you very much, Fernando.
No, thank you. My pleasure. Always great to talk to you. Very curious to see how the analysis pan out and what is the outcome and what is the view of the students on ABI.
That's great. We see you on the final. On the final. Thanks, Fernando.
Thank you.
So moving on, Sean, I think that there's another one here that's quite interesting that we just got, and actually we really like to make this question when we are analyzing other companies here at Constellation. So, what do you think are the most important challenges that ABI must address in the coming years? How you should tackle what is that can't go wrong, or what are the main risks? I think that's a very good one to help the students as well.
What are the main risks, Sergio?
Yes, what are the main risks and challenges for ABI in the coming years?
Yeah, so I think if you think about the history of ABI that Fernando was sort of speaking about, where there was a very consistent, repeatable model of value creation, and it was focused on sort of transformational M&A, leveraging the company, being very efficient with the acquisitions that were made, repaying debt, and then rinsing and repeating that over and over again was sort of the strategy, which was very clear over the last sort of 15, 20 years, and resulted in very strong, large, big business that we have today, but not necessarily had a clear focus on growing the beer category overall. I think the pivot or the shift in strategy now to being more organic growth led and to creating value from this base of assets and this broad portfolio of brands and countries which we now operate in is sort of the next leg of value creation for the company. So I think the key risks that we have in front of us is really being able to work together with others in the brewing industry on really growing beer as a category. I think it's something which others in the alcohol beverage industry have probably done better than beer has over the last 10 or 20 years. I think the spirits industry has done a good job in being able to stretch the price ladder and create a very premium business at a high price point, and they've been able to expand their business and portfolio within the more developed markets. I think the challenge which we as ABI have, as well as our peers within the brewing industry have, is to really enable beer to reach its full potential in terms of overall volume of total alcohol beverage is sort of one of the key focus areas. I think another key risk is the reputational perspective of beer and alcohol as a category. I think there's a narrative that beer and alcohol in general might at some stage go a similar route to tobacco, where you see very heavy regulations, very restricted ability to sell, very restricted ability to market, very restricted ability to brand. And I think for all the right reasons, tobacco is an industry which will probably continue to be in slow decline. We think beer is different. Beer is a differentiated product. Beer is about socializing. For every one job I think that we have in our company, we've enabled 27 jobs throughout the value chain of the beer sector, and it's about positioning and ensuring that beer as a category and us as a business maintain sort of the corporate reputation that we have, as well as the contribution to society, both from an economic and social perspective, and do not get put into the same bucket as tobacco, for example, is probably a key risk to consider. And then remaining relevant, I think, as a category is probably the third one I would mention, in that you have industries and you have categories which have probably not evolved together with consumers, and therefore have become less relevant as a source of demand or as a product for consumers. I think as we have a younger population sort of emerging into the legal drinking age population, ensuring that beer is a category, the products that we have, the branding that we have, the differentiation that we have through different styles of beer, different pack types of beer, different price points of beer, ensuring that the category remains relevant across all ages and all generations is probably one of the other sort of main focus areas for us. So I think we see less of a risk to us from a overall competitive environment. I think, as Fernando mentioned, beer's always been competitive, and really we welcome that, because I think it helps to grow the category more broadly. I think the only risks you can really see in an industry that's been around for 600 plus years or 1,000 plus years is more about the corporate reputation side. It's about fulfilling the potential of beer within alcohol as a category as a whole, being able to compete effectively with spirits and others which compete for the same occasions as beer in some instances, and then the last piece, just ensuring that we remain relevant to consumers and are listening to what consumers want, so that we don't become a brand or a product or a category which does not move together with consumers as their needs and occasions are changing.
Great, Sean. So we have another question here from the chat. Jose Cordero is asking, how is technology helping to forecast beer production growth in the coming years?
So we have, I guess there's two pieces to technology. I guess there's we have this brewery of the future or supply chain of the future concept in the business, where from the production side, I think actually we were piloting it in Brazil at a couple of the breweries, where ensuring that each of the key pieces of machinery of the brewery are actually connected wirelessly to an analytics system, so you can see how they are functioning, when they break down, why they break down, what the reasons for downtime are, sort of like a real-time maintenance review, which enables the breweries to be more productive, more efficient with lower maintenance costs. So I think on the production side, technology is helping us to ensure that the equipment that we have, the breweries that we have, are producing as often as possible, at the best quality as possible, with the least maintenance required as possible in terms of cost efficiency. So both from a production efficiency and cost efficiency perspective. We also have technology as a enabler within our business overall. So more so transitioning from analog Excel workbooks to more Power BI platforms to have a more dynamic sort of business intelligence analysis for us within the corporate center. So technology is helping us to understand better the data that we have, and also utilize it to make smarter decisions within the corporate center. So Fernando spoke a little bit about the importance of resource allocation within the business. And I think if you go back 20 years for ABI, it was quite a simple business in terms of we sold beer in probably 6 countries in maybe 2 different currencies, and that was the extent of the business. Whereas now, we operate in 50 plus countries, in 25 plus functional currencies across beer, beyond beer. We're investing in technology capabilities, and to be able to have a clear framework and the data in order to make smart decisions about where to allocate our capital and why to generate the highest return on invested capital is something which is technology enabled. We're a product of mergers, so we have many different ERP systems globally, which makes it inefficient in many instances to be able to have a point or one source of truth of financial information in the same format. So technology has been helping us do that. And then the third lever of technology for us is the B2B platform and the D2C platforms that Fernando sort of spoke about. I think B2B is the one which is the most transformational for the business in moving from having a analog physical sales force that visit customers once a week for 7 minutes at a time at the most, to having that order taking process being fully online through a platform, empowering the customers to place the orders themselves, capturing the data of all those 10 million transactions that we have each week with the customers to know when they buy, what they buy, how much they buy, as well as what the patterns of behavior are around all other customers in the same region with the same attributes. Just enables us to be more efficient about how we offer them promotional campaigns, what pieces of our portfolio we offer them to enable sort of algorithmic selling to certain customers, just improving the core beer business, as well as the sort of further value creation opportunities through the marketplace concept, which Fernando mentioned, and then other areas to sort of sell services to these customers once you've already established this pipeline of digital communications. And then that also frees up our sales force to not spend 6 of their 7 minutes when they're at the actual outlet in taking orders for Brahma and Antarctica, but they can spend all that time on actual category development, shelf placement, and ensuring execution of our portfolio within the store. So that, if you put into the 3 pillars of technology, one is on the production side, enabling us to be more efficient. There's one at the actual sort of corporate office side in terms of leveraging technology to be more efficient with the financial data that we have and how we make decisions. And then there's the B2B and D2C platforms actually improving the core beer business, and having other areas of potential value creation.
Great, Sean, thanks. So the last one from our side, we received from email, and I think it's a very relevant question. So talking about culture, how do you think that ABI's culture has been evolving in the past few years? What were the main changes? And I think it would be very interesting if you could link this with the focus that the company is giving to ESG, to an ESG agenda. I think it would help a lot the students.
Okay. Yeah. So I mean, culture is probably one of the most important, or the most important thing to ABI, and I think it's evolved not necessarily over the last few years, but over the last 10, 15 years. You obviously have our 10 principles. We have a common dream amongst the company, which has remained the same over the last few years in terms of building a profitable growth company. We have the 2 principles related to people, in terms of people being our greatest strength, and recruiting, developing, and retaining people who can be better than ourselves. And I think all aspects of the 10 principles sort of remain true, even with the transition from Brito to Michelle over the last year or so. Both Brito and Michelle were a product of a long period of history within the company, both very much aligned with the culture of the company. I think for Michelle, what is important to him is really 3 overarching themes, which are areas which he felt we should be refocusing our efforts on. Not a change of the culture, but more focusing on key elements of the culture. The first is simplicity. The second is collaboration between the teams. And then the third was a long-term mindset within the company. And he has taken sort of certain steps in terms of the ways of working of the business, focusing on each of those 3 pieces throughout, changing the way we have our monthly performance routines with him, the way we do our monthly reporting with him, the structure of his time between running the day-to-day of the business versus actually focusing on the governance and the people of the business. He sort of restructured the whole CEO calendar about how his time is spent. And then on long-term mindset, we've actually recently revised some of our remuneration and incentive policies within the business to restructure a little bit the sort of the weight of remuneration between base salary, short-term incentive, and long-term incentive to be more weighted towards the long-term incentive to align ourselves better with shareholders and shareholder value creation. One of those elements of remuneration now tied to overall TSR performance of ABI versus a benchmark of our peer group. So I think cultural-wise, the business has obviously shifted a little bit away from sort of transformational M&A focus, more towards organic growth focus, and the incentives and growth targets reflect that transition. I think the underlying culture of the business is relatively unchanged, and the concept of being an owner in the company, never being completely satisfied, consumer and customer focused, being a common sense, no hierarchy, meritocracy-led business is one which resonates with everyone within the company. I don't think will change anytime shortly, and it's one which everyone is sort of aligned behind and passionate about. But I think aside from the culture, more the strategic focus, how we incentivize our people and how we manage our sort of ways of working, there we've seen a bit of a change over the last couple of years, both with the transition in strategy and with sort of Michel replacing Brito more recently and sort of focusing on areas that are important to him.
Sean, I wanted to thank you one more time for the event. We're receiving very positive feedbacks. We know that students are getting very excited and happy to learn about the beer market and study about ABI. And I wanted to pass the word, if you have a final message to pass to the students.
Yeah, I mean, I think it's a great opportunity. And I remember when I was in university in South Africa, in Cape Town, we had a similar challenge within my finance, the finance course that I was doing at the time. And it's an interesting opportunity, not just to learn about a company and a category, but more about the process of evaluating why companies are valued the way they are and sort of why share prices are the way they are. And the interesting thing is that there are many different opinions. So we have 30 equity research analysts that cover the ABI stock. 27 of them sort of publish on a regular basis. Of those 27, 16 of them have a buy recommendation on ABI, 2 have a sell recommendation on ABI, and the balance have a hold recommendation of ABI, and that changes every 12 months as the business evolves. We also have obviously many large shareholders that believe in ABI's equity story and long-term growth, and we also have shareholders that don't. So I think there's no right or wrong answer. I think it's about the principles about what you believe the long-term growth prospects of the category, the business, and then the management are. And I think those 3 pieces will help you make the right decision about whether you believe it's a category that you think has strong investment and long-term growth propositions, then about the company itself that you are evaluating, and then compared to peers, is it undervalued, fairly valued, overvalued, to be able to make your decision and recommendation. So I think ABI is a complex business, I guess, in terms of just the number of countries we operate in, but beer by itself is relatively simple. So if you focus on one thing as you build out your models, I know you've heard a lot today about beer, beyond beer, digital transformation, and it's hard to wrap all that into one picture about what the growth prospects of the business are. But if you look back over the history of overall beer market growth across key countries, you'll see it's relatively stable. Then there is sort of pricing and price mix that results in net revenue growth. Then there's operational leverage through the P&L, which results in EBITDA growth to an EBITDA margin level, which through history has fluctuated for us anyway between 35 and 40%, maybe slightly above that. So you'll get a good picture about what is a reasonable growth forecast and what is not. And we've done some of the work for you in terms of providing a medium-term outlook over the next 3 to 5 years about what we expect organic EBITDA growth to be. I think there are unknown unknowns in terms of currency impacts and how that relates to actual translated nominal dollar EBITDA cash flows, or EBITDA and cash flows. But I think you have a lot of information out there on ABI, so enjoy it, read as much as you can. No wrong answer. It's more about learning the process. And I wish you guys all luck, and hope to see some of you in the final panel.
Então, pessoal, a gente oficialmente encerra o evento com isso. A gente gostaria muito de agradecer a participação de todos. Acho que foi super legal a interação, as perguntas. A gente aqui da Constellation está super animado para o resultado das apresentações. Então, amanhã, relembrando a primeira entrega setorial e o resultado de quem vai avançar para a entrega final sai na segunda-feira. Então, muito obrigado a todos que participaram e a gente vai encerrar por aqui.
Boa sorte, pessoal.